My name is Matthew Buckley. My call sign is Whiz. That's obviously not my God-given name. I flew the FA-18 Hornet, as Reed said, for about 15 years for the United States Navy. Graduated from the Navy Fighter Weapons School, known as Top Gun, and also flew 44 combat sorties over Iraq. I obviously didn't think that was exciting enough and decided to head over to Wall Street. As a young officer flying in the United States Navy, in between flights, I didn't sit in the ready room, reading a newspaper or playing foosball. What I did was I taught myself how to trade options. Okay, so and obviously you guys probably already have your disclaimer that you knocked out. So, in addition to graduating from the Navy Fighter Weapons School and flying combat missions over Iraq, this was in the early 90s. I was day trading stocks, kind of part-time, and I knew that, obviously the resulting bull market, I started treating my trading like a form of combat. Because as many of you know, trading is a form of combat, right? So there's a winner and there's a loser, and you can be damn sure what side of the equation I plan to end up on there. Got out, applied all my methodologies that I learned flying fighter aircraft, having a strategy, contingency planning, being disciplined, managing risk, knowing when to get out of a bad situation, knowing when to stay in a good situation, and I eventually popped up on the radar of one of the largest volatility arbitrage options trading firms in the world, headquartered in the Chicago Board of Trade. Also the founder and CEO of the Options News Network, on the floor of the CBO and the CBOT, but unfortunately, no offense to anybody on our training session today from Chicago, couldn't stand it. I'm a beach guy, I'm a Navy guy, I need water, so we moved down here to beautiful South Florida, where I founded Top Gun Options, and about 2 months ago, I joined up with T3 Live. T3 Live, many of you are familiar with. They are without a doubt, the best stock day training firm out there. You can log in, watch their virtual trade floor, watch real institutional traders as they swing around some serious capital. They've always wanted to launch an options product. I've always wanted to kind of launch a stock product at Top Gun Options, so we kind of had this Reese's Peanut Butter Cup, and that's why Top Gun Options is now T3 Live. Additionally, I'm a Fortune 500 executive consultant. I flew back yesterday from Vancouver, where I was working with a Canadian division of New Holland to sell big old tractor and farm equipment. I'm hopping on an airplane tonight to fly up to Nashville to work with one of the top 4 temp agencies, employers in the nation. What the hell does this have to do with trading at all? Well, take a look at some of the companies that I've worked with their C-level executive, with their salespeople, with their frontline employees. I know what's going on in the economy before Wall Street ever has a clue. All these economic reports coming out, the traders at Top Gun, and now at T3 Live, get a first-hand look as to what is going on and where we're going. Okay. Now, as a fiduciary in these companies, obviously I don't trade in their names. I'm prohibited, and the compliance officer keeps an eye on me. I wouldn't anyway because it's not right. But it helps me develop my strategic mindset, which we're going to talk about in a couple minutes. Where I think the market's going, why, and then looking at tactics to potentially profit. This methodology works so well. The methodologies that I employed over Iraq, it works in the business world, and it also works in the NFL as well. So over the past couple of years, I've worked with a couple teams there. Coach Fisher up there in St. Louis last year with Coach Rivera and Cam Newton as well, teaching them a lot of the methodologies that you're going to learn this afternoon, this evening, that I have applied to my trading with incredible success. But let there be no doubt, I'm an Eagles fan. So I did my duty, so to speak, but I'm a diehard Eagles fan. All right, let's go ahead and get started real quick. From the cockpit to the trading pit, how did I end up talking to you this afternoon? Absolute tragedy is what brought me to the options trading world. Late 2000, early 2001, like a lemming, I followed most of the Army, Navy, and Air Force pilots out of the active duty and went to go be a rich airline pilot, working 1 day a month and doing a conga line in Cancun. Well, my first flight was scheduled for the morning of September 11th, 2001. My wife came in, said, hey, you better come take a look at the TV, and I went out there, and big smoking hole, broad daylight, I'm going through my mental aviation checklist of what the hell could have happened. Saw the second airplane hit and knew we were under attack. Immediately raced in the bedroom, threw my American Airlines uniform that was still wrapped in its plastic, never been worn, out of the way, and I raced out to Naval Air Station Fort Worth, Texas, where I was, after I got off active duty, I got picked up to fly F-18s in the reserves, and I ended up going from potentially flying in an airliner that day to shooting one down. Ended up flying combat air patrol over the Southwest United States. Not only to potentially shooting down an airliner, but potentially shooting down one of my best friends, because most of the guys in the reserve squadron flew for American Airlines. So imagine that, folks. Imagine having to shoot down an airliner full of civilians and also one piloted by one of your best friends you flew combat missions with. So obviously, as one of the most junior pilots at American Airlines, I got furloughed in the blink of an eye, gone. Thousands of pilots lost their job. So that's when I applied myself full-time to my trading and was so successful at it with what I'm going to teach you this afternoon that I became, out of the blue, that managing director of strategy for a $2.5 billion firm. Why? Everything you're going to learn this afternoon. I'm not going to talk about what options are, who can trade them, why trade them, when, and how. These guys have done a great job today. Online Trading Academy in front of me, and all those guys, really nice job today as I watch some of the presenters, as some of them have talked about options. So, I'm not going to belabor the point, especially with what's going on in today's market. This is the time you should be trading options, folks. The VIX was up 21% at one point today, and we're going to cover that because I'm about to get bearish on it. Made some nice profits today on being long vol, and I'm going to show you that I'm getting short vol with a trade here pretty soon. This is my methodology, though. Write this down. Hopefully you have a bunch of pages of notes from the presenters in front of me. Strategic, operational, and tactical. Okay? This isn't rocket surgery, but this is how you should be trading, okay? Write that down, SOT, strategic, operational, tactical. What do I mean? The average retail trader, many of you are very, very tactical traders. What's that mean? You have no idea what's going on around the world, right? Remember one day we woke up about a year ago and you're like, where the hell is the island of Cyprus and why are the futures down 600 points, right? Why are the futures down 100 points? And what's China's industrial production numbers have to do with my trade on Tesla today? Everything, right? So very tactical traders. You wake up, you turn on Comedy Central at what I affectionately call CNBC, and hey, geez, they're talking about Apple right now. Maybe I'll trade Apple. Ridiculous. Very, very tactical trader. That is not what we do here at Top Gun Options, okay? We don't we don't put on a trade and go, well, this is why we have it on and this is kind of what it supports. We do the exact opposite. I'm going to give you a quick strategic brief, my intelligence gathering about what's going on around the world. Then I'm going to give you a quick operational brief about what I think is going on here in the United States in the markets and financially, and then and only then will I talk about a trade. Strategic, operational, tactical. And if you learn nothing from me tonight, write this one down, okay? Write that strategic, operational, tactical, but for the rest of your trading career, you're going to ditch the term an options strategy. There is no such thing. It is a tactic. A strategy is saving for college, saving for retirement, buying a boat in 6 months, managing risk, short-term income generation. Those are strategies, folks. A tactic supports a strategy, right? Let me give you an example in my world. We don't throw a rifle at a Marine and say, hey, march in that direction. Well, why, sir? Just do it. You think that's how we execute in the military? Of course not. There's no morale in that Marine. He or she just kind of goes, all right, I have no idea what I'm doing. I'm just going to walk in this direction with this rifle and maybe kill bad guys. Wrong. Strategic objective, win the war in Iraq. Operational objective, take this town. Tactical objective, Marine, take this rifle, guard this bridge for the next hour so an armor brigade can cross and take the city. Strategic, operational, tactical. So don't ever use the term again, hey, I like my favorite option strategy is an Iron Condor. You'd be wrong, and you'd owe me a beer. Change it. Write this down real quick since I'm limited on time, guys. I can't go through all of these individually, but I'm going to do it when I place my trade. Here is our proprietary 7-step trade plan. Okay, write that down quickly, and I'm going to hit it very, very quickly because I want to get to trading. I want to take a look at some risk management, especially on a day like today. I couldn't be more thrilled that I'm talking to you today with the bloodshed in the market, because a lot of my trades made money. First thing you have to do before you squeeze the trigger on any trade is have a strategic mindset. Bullish, bearish, volatile, neutral. And volatile and neutral are not even close to the same, so different strategic mindsets, okay? Then we identify our target. Apple, Tesla, the SPX, XLF, whatever it is, that is the target, the stock, the index, the ETF. Then we have what I call commit criteria. Why am I committing capital to this trade? This is also called the cocktail party statement, right? If I bump into you at a cocktail party and you go, hey, Whiz, I'm in this Twitter trade, and I go, why? If you stand there with a blank look on your face, you're going to get wiped out, folks. What is your commit criteria? You should be able to rattle off 3 to 5 sentences like an elevator pitch, right? 90 seconds of why you're committing capital to this trade. That's a fighter pilot term, commit criteria. If we have enemy MiGs airborne 50 miles off our nose, but they're not pointing at us, well, they don't meet our commit criteria. We're going to hang out where we are. Now the AWACS, the controller, tells us those MiGs 50 miles on your nose are now pointing at you, and we think they're Su-27s carrying long-range missiles. Guess what? They just met my commit criteria, and I'm going after them. Tactic. Now that we have our strategic mindset, we've identified our target, we know why we're going to commit capital to it, now we're going to figure out what the tactic is. Bullish double vertical, bull put spread, bear call spread, long call diagonal. Those are tactics. After I identify the tactic, I'm going to talk about the employment, how I put it on. I'm going to sell these calls, I'm going to buy these. However the employment goes, and I'm going to show you that. Next, we have mid-course guidance. Ladies and gentlemen, I don't lob a bomb down range and close my eyes and go, I hope that hits somewhere, the target. Mid-course guidance. What happens during the life of the trade? What if the volatility goes up by this %? What if the market moves down by this %? What is our mid-course guidance? What are we going to do? And finally, our exit plan. I know exactly where I'm going to exit a trade every time before I enter it. No emotion. If I am in my F-18 Hornet and I get 2 engine fire lights, there's smoke in the cockpit, and my wingman's screaming at me, Whiz, you're on fire, I don't sit there and scratch my chin and go, I think I can save this airplane. That's when I reach between my legs and I pull the ejection handle, and time to give the jet back to the taxpayers. Exit plan. When am I getting out of this trade for max profit? When am I going to eject for min loss? Now, this looks like an eye chart, but for the first time in your trading career, you can quantify risk. And it sucks to be brutally honest with you, only have 45 minutes, because this alone is a couple-hour lecture, and it would change the way that you trade. Many of you, I would ask at that cocktail party after you told me in Twitter, I'd go, hey, how risky is that trade? And you'd look at me and go, kinda. T3 Live traders know to say it's a 3. It's a 1, and I know it. It's a 5, Whiz, I'm cool. Why? Look at the vertical axis. Vertical axis. Severe loss of capital, significant loss, minor loss, minimal loss. Put a number in there. Take a screenshot of this, or I'll tell you at the end how I can get you a copy of this. Put numbers in there. A severe loss of capital to me might be $5,000. To you, it might be $100,000. To your neighbor, it's $1,000. Minimal loss might be $500. It might be $100,000. I don't know you. Love to meet you one day and buy you a beer. But put numbers in there. And across the top, A, B, C, D, when we talk about the probability of something occurring, it's either likely, it's probable, it may happen, or it's unlikely. Now, I am not going to take credit for this. I copied and pasted this from the United States Navy Operational Risk Management, where if we fail, we get killed. So this works perfectly in trading. Been using this since day one of flying fighters. We know that if something, it's probable that Apple might miss earnings. I have an Apple trade on. And if they miss earnings, we're going to see a severe loss of capital. Now I know that is a 1. And these are my color codes. You can color, you know what, Whiz, 1s and 2s to me are red. Okay? I know that that is a very, very risky trade. And I know It's a lot of risk, but a lot of reward, okay? Again, I can't spend a ton of time on that, but trust me, folks, you're going to be able to, before you place any trade, know how much risk you have and give it a number. You're going to be able to quantify how much risk is in that trade, okay? I want this to be you if a trade goes against you. You know what? Time to give this jet back to the taxpayers. I'm out. No emotion. That Canadian F-18 pilot, when his engine, he was at 200 feet when his engine failed during an air show demonstration practice, and he rolled through 90 degrees angle of bank, he knew, done, out. If he had waited a half a second more, he would have been dead. Okay? So I'm going to teach you all of those methodologies here at Top Gun Options. So here's what I'm going to do. I'm going to switch over to my, let's go with, let's get online here. Okay, real quick, SOT, Strategic Operational Tactical. Strategic overview. Let's go. Let's take a quick spin around here. Unless you've been in a cave for the past couple weeks, you know that we've finally woken up to the threat that's been growing for 4 years inside Iraq. We won the war, folks, and we lost the peace. Not going to get into the politics of it, but let's just say in 2011, when we left and said thank you, good night, try the veal, that was the dumbest thing we could have done. And again, well, I'll leave the politics out of it, but here we are again. Why do I bring this up? The market really isn't caring. Anybody remember Ukraine? We've kind of written that off too, haven't we? We've already written off Crimea. Yeah, he took it. Eastern Ukraine? Wow. But remember that was moving the market around a little bit, wasn't it? My God, the day that airliner got shot down? Holy crap. And by the way, the Russians did it. I have a lot of buddies still in the Pentagon. One just made 2-star admiral. I won't tell you his name. The Russians shot it down on Ukrainian soil, but it was Russian manned, and they were training the rebels. I'll leave it at that. This really isn't impacting the market. Big military events might move the market a little bit, but that is not why we went down today. Okay, so Middle East is kind of a train wreck right now, which doesn't surprise anybody on this. Why did we go down today? Okay, staying strategic. Russia, speaking of Ukraine, Putin fired a big shot across our bow. Okay, the Moscow Times said Russian courts might be allowed by the government to seize foreign assets on Russian territory as a retaliation of the sanction. You smack me, I'll smack you harder. Well, I'm going to smack you hard. You know, we're in 6th grade here, folks, with the sanctions. That freaked the market the hell out. I can tell you that was part of it. The next reason, this number right here was absolutely nuts. The durable goods order today, talk about coming off the turnbuckle here, nuts. So let me scroll down to our flight schedule today. Look at this. We were at a 22.6 last time, last durable goods order. And remember, folks, there's 2 types of durable goods, core and durable. Whenever you see the word core in any sort of economic report, it means what? X. It means excluding something. So in this case, core durable goods were excluding transportation items, okay? This includes transportation items, okay? So does anybody know why we had a 22.6 last time? Can anybody let me know? And it is near and dear to my heart. Why? Because they build the F-18 Hornet. Boeing more or less powered the last durable goods orders report. But I can tell you, as a consultant out there, working with New Holland, and hey, Whiz, we ain't selling tractors worth a damn. It's really, I knew this was coming. And that's why I profited today. I obviously didn't know what the hell the number would be, but I knew that the durable goods number was going to suck. And it did. Okay, so that's bad. Very, very bad. Also, we still have a little bit of a hangover from China. The China industrial production numbers that came out last week, again, totally stunning. And then we saw on Monday night, HSBC's flash manufacturing PMI. It was a little bit of a beat. But later in the week, yesterday, we found out that they might clip their Janet Yellen. They might get rid of their Fed chief. the People's Bank of China. Remember, folks, central banks are driving this market higher. Okay, let there be no doubt. I'm sure a lot of the speakers today covered this. It's a broken record, but let me show you with men lie, numbers don't. Take a look at this chart. If you don't believe that central banks are keeping this market, look at this. Since 2009, look at the Fed's balance sheet in the blue. Look at what the market did. Fed balance sheet, market. Look at and here we are. Here's the Fed, the Bernanke taper. What are we doing? Where is this market going? Okay. And the other reason that we've kind of been melting higher has been this. The number one buyer of the S&P 500 year to date has been who? The S&P 500. Does everybody understand that? With these record low interest rates, companies are using the cheap cash, to buy back their own shares. Hey, great if you're a shareholder, but folks, that's a snake eating its own tail. That can't last forever. You either run out of shares, you run out of money, right? And that's artificially inflating earnings per share, it's their bottom line. It's kabuki theater, folks. It's musical chairs, and it's going to stop. I don't think today's the big one, Elizabeth. To channel my inner Fred Sanford, I don't think today's the big one. That's why I'm going to show you a trade that's I'm going to get bearish on volatility here after showing you that I got bullish on volatility. Okay, so and finally, one of the reasons that the market imploded today was Dallas Fed Chief Fisher. The guy's a hawk, right? He's one of those guys. It's like, I don't know why we haven't started raising interest rates, and he said it again today. Kind of a few good men style. I strenuously object, right? He thinks we need to start raising interest rates a hell of a lot sooner than the market feels. So guess what? Temper tantrum out of the market, also based on what Fisher had to say, okay? So last week, Wednesday, we had a couple free live training sessions for T3 folks. Had about 1,200 people show up. And then we had kind of an emergency training session, again free, on Friday because I wanted to cover the reaction to the Fed. I want you to, if you can, write down this trade, okay? And let me show you when this email came out. I sent this out Friday to my traders at 3:58, okay? That's actually when the email fired, but I sent a text alert out a lot before that so this trade could get filled, okay? Look at this. This is a bullish double vertical on SDS. If you have no idea what the hell that means, don't worry about it, stand by. But some of you probably do. First of all, SDS is the ProShares Ultra Short S&P 500. Okay? Meaning this goes up as the market goes down. Okay? This goes up as the market goes down. Okay? And I placed this bullish double vertical on SDS to potentially hedge against a market pullback between now and October 31st. I am not Nostradamus, folks, but this trade, look at this. We took in a credit. We took in a credit of 15. I did 150 contracts. You can do the math. 150 times 15. I took in a credit. I got paid to do this. The market paid me to put on insurance. Whiz, let me get this straight. Somebody walked in your kitchen as you were writing out your check to State Farm for your home, car, and life and said, hey, I got this until the end of October. Yep. The max potential, this trade right now is valued, has a profit, where is it, of $2,900 since Friday. $2,900 this trade has gone up. And it's a hedge. This trade makes money as the market goes down. Now, the max potential profit there is $9,800. Now, if we hit max potential profit on this trade, the S&P is going to dip another maybe 20, 30 points. But this made money today. My VIX trade, let me see if I can figure out how to pull that up. My VIX trade. Also last week, we put on a VIX bullish double vertical. Look at this one. 50 contracts. A bullish double vertical, and I'll show you here in a couple minutes what a double vertical is. Okay, this is I had the October 12-13 bull put spread on. That is called a credit spread, right? I take in some coin to do it. I used some of that coin and bought the bull call spread, the 15-16. I closed that today early because I didn't think we were going to roll over even harder for a profit of $1,800 since Friday. So $2,900 on the SDS trade, $1,800 on this trade. Now, know that a lot of my longs today got kicked in the gut, but I'm going to show you something. That's why they're called longs. I am long-term bullish on China, Russia, Brazil, Apple, all the way out, and I think the 2017 option series is starting to roll off the assembly line here. I can be very, very long-term bullish, but short-term neutral to bearish, and use what I call front-month hedges to make money as my longs get kicked around every once in a while. Okay, so let me pull up my Trade Monster screen, and you can trade with whoever the heck you want to trade with. So let me try and do that here. And hold on one second. Let me make sure that you guys, let me close this out really quick. Okay, let me show that to you. Okay, can you guys got my screen, right? Vertical head nods? Okay, look at this. There's that VIX trade that I closed out for an $1,800 profit. This portfolio I also have an SDS trade on, but that other one was in one of my different portfolios. Look at this. These trades, like synthetic stock on China, it's up $3,600. It's out to January of 2015. I am long-term bullish. So on a day like today, long call diagonal on AIG, one of these I think is out to 2016 or 2017. All of these trades are very, very long-term bullet. Look at this, XLF long call diagonal. I'm long 15 of the January 15, 13 calls. These were deep in the money 80 delta calls that I bought. And I can teach you why I buy deep in the money calls as far out in time as I can, and then I sell the front month. Every month. We average about $1,000 a month in average in our long call diagonals. This trade's been on about 7 months, maybe 8 months. And it's up $8,400. Not sexy trading, not weekly options, not total crack pipe. Nice, slow and steady wins the race. Okay. So what I want to do, and I sent this trade out to my traders earlier. I'm going to get bearish on volatility. Whiz, are you nuts? Did you not see the VIX today? Yeah, I did. Write this down under your other Whizisms that you're picking up tonight. When vol is cheap, you buy it. When it's expensive, you sell it. Write that down. When vol is cheap, you should be a buyer. When it's expensive, you should sell vol. Okay? What do I mean by that? The VIX, look at that. It was up 21% today, and it came back a little bit. The VIX is a mean reverting instrument. What the hell does that mean? Think of a big pasta bowl, right? Put an orange on the end of it. Push it in, back and forth, and right in the middle. It tends to revert to its mean. The resting heart rate of the VIX for a while last year used to be about 13. And then peace, love, and understanding broke out for some reason, and it turned out to about 12. You see that? But look at what happened. Every month, there's been something that has freaked the market the hell out. Look at this. From its resting heart rate. I'm not going to sit here and draw lines all night, but you get my point. When vol is cheap, 12, 13, you buy it. When it's expensive, 18, 16, 17, 15, you sell it. Folks, the VIX doesn't stay elevated forever. Okay, I'm down here in South Florida. Tropical depression over the Bahamas. Everybody runs and gets hurricane. Well, you should have it anyway, but as an example, everybody runs to get hurricane insurance. Great, I got it. Sitting right here on in my desk. Now it's coming closer. I'm not going to go out and get more insurance or go buy another one. You already got it. So when the market freaks out and flocks and gets their protection, they're kind of done. So once the reason the market is freaked the hell out has passed, look at what happens to vol. We call that a volatility crush. It just implodes. Let me show you a great, and here's an Obama teachable moment, folks. This is May of 2013. The VIX went from 12 to 22. 12 to 22. I want to ask you all a question. With that huge spike in the VIX, was the market going up or was the market going down? Somebody tell me, was the market going up or was the market going down? Somebody tell me, because I forget. Kidding, I'll tell you. The market was going up. Well, Whiz, why the hell did the VIX freak out? Anybody remember what was going on around that time? This was that Fed meeting. I was speaking to Bank of America at Merrill Lynch out in San Francisco. I remember stopping my speech so we could all watch the Fed announcement. The uncertainty. Everybody and their mother, including mine, thought that that's the Fed meeting where Bernanke was going to come out and start tapering. They flocked and got protection. He's going to start to taper. Soon as he opened his mouth and said, hey, we're staying the course, 85 billion looks good to me a month, that air went out of that balloon and vol imploded. I kind of miss the year, 2 years ago, the government shutdowns. All right, we got 24 hours or we're going to bounce checks. I loved those periods. These were layup trades. Bullish double vertical, because I knew the Republicans were going to shut the government down to prove a point, and then a bearish double vertical because I knew the government's not going to stay shut down forever, right? Common sense. So why, as you can tell, hopefully, I'm giving you my strategic mindset right now. Step one, I'm bearish on volatility. Can it go a little higher? Yep. I mean, look at, how high we were today. However, even look at this last freak out. Remember when the market sold off hard at the end of July and August? Look, vol stayed elevated for about a week and then imploded back down to its resting heart rate. Can we go a little bit higher? Sure. Something have more bad news tomorrow. What is on the flight schedule for tomorrow? University of Michigan, and I think some maybe inflation data. Nothing massively. So here's my point. As I said, I closed out this bullish double vertical today for 1,800 bucks. I could have left it on a little bit longer, but obviously coulda, shoulda, woulda, and I'm not going to trade in the rearview mirror. What I sent out to my traders tonight was to get bearish on volatility, and let's take a look at that. I'm going to get bearish on volatility. I think between now and you know what? Let's actually go out to November. I sent out an October trade, but I'm feeling. Even though October is historically a very volatile month, let's go out to November, okay? But let me pull up these strikes real quick. For some reason, let me try and build this trade. Create spread. My trade monster platform is starting to give up the ghost a little bit here after hours because it's not pulling up an order ticket. Well, that's not good. Unable to establish a network connection. I think the guy in front of me had the same warning there. Just to confirm, you guys can hear me and we're good to go? And I'm not just talking to myself? Let me try that again. Options. Okay, let me shut that, guys. Let me just try and open it again. Okay, let me try that again here. Let me just show you my screen, and let's see if I can reload my trade monster here. Sometimes after hours, as they're updating stuff, the options chain is slow to load. But what we're going to do is we're going to sell the 15-16 bear call spread. That is perfect. Wow. Any other trade monster customers on here? I guess I can pull up my options house trading platform. That is pretty funny. Murphy's Law. That is not good. As that's let me send this, let me show you the trade at least, because in my live training sessions, anytime I identify a trade, we have live training sessions throughout the week, I immediately send out a SMS, a text, and an email. So you don't have to be in the live trading session. Matter of fact, 80% of our traders at Top Gun Options work for a living, right? So they can't necessarily attend our live training sessions, okay? So don't worry about not being able to attend. You will get every trade text to you as soon as I place it on there. So let me look if it's in the urgent alert. Any other Trade Monster folks having issues? That is just, here we go. Hold on. There we go. Sweet. All right. Okay. You guys see my trading screen, correct? We're good? Okay. But again, it's being a little slow here. Let me close some of my windows. Maybe that's what it is. Regardless, folks, let me talk through it as this thing is loading. The 15-16 NOV bear call spread, okay? I want to sell that. That is it. I'm going to sell the 16s and buy the 17s as a hedge, okay? Or I'm sorry, 15s and then the 16s. Selling the 15s and buying the 16s. And that is not good, Trade Monster. Let me just show you. Maybe I'll open a different portfolio. And again, guys, this is my apologies. I'm going to, John and Pete Nigerian own Trade Monster. Buddies of mine from Chicago remind me to, I was going to say kick them, you know, poke them in the chest, but they're both former NFL players that could bend me into a pretzel. Let me try a different portfolio and see if the options change is going to come up on that one. Nope. Definitely not good. All right, well, I will talk through the trade then, guys. Okay, so hopefully I can fix that. That is not good. Should be able to see that. Okay. So you should be seeing our urgent alert right here, email, SMS archives. Maybe it is just my internet. All right, guys. Well, here's what I'm going to do. Let's just I'm going to build the trade without being able to show you any of the metrics around it. So you're going to have to take my word for it. Out to November. Okay. So here's what we want to do. Go out to November, and let me just look at. Let's take a look at the strikes here. Okay. The 15-16. Okay. I'm going to click Create Spread and go with Double Vertical Spread, okay? And they're not showing up, but this is what the trade would look like, okay? I'm going to sell the 15s, buy the 16s, and real quick, if you don't understand what I'm talking about, don't worry about it. I'll explain it in a couple seconds here. And we're going to do the 14-13, okay?
Hey, Matt, I don't mean to interrupt, but we're looking at about 5 more minutes.
Thanks, man. I
right,
appreciate. Cool. Yep, I appreciate the mutual support. Okay, so this is a trade called a bearish double vertical. Okay, and actually, real quick, I had in this portfolio I had SDS up, so that was not the strikes I was. Or I'm sorry, yeah, I would not be looking at that on SDS. Okay, so again, let me close all this stuff, go to November. Now, there we go. Sweet. 1516, I'm going to create spread, vertical spread. This is a trade that makes money if the VIX goes back down to its resting heart rate or volatility comes in, okay? That's the term we use. Again, when vol's cheap, you buy it. When it's expensive, you sell it, okay? I'm going to do the 1413, okay? Let me flop these around. A bullish double vertical, folks, if you've never heard of it, is just simply two vertical spreads on top of each other with the same strategic mindset. In this case, I'm bearish on volatility. I think it's going to come back in. I don't think the world's ending. I think the market's oversold. I'm going to sell, and I'm going to end up doing 50 contracts, but I'm going to sell, and it's the wrong expiration, of course. The NOV, as you guys saw, these should all be NOVs. November 15 calls, and I'm going to buy the 16 calls in case I'm wrong. That's my hedge to the upside. If I'm wrong and we have, nuclear war and the VIX goes up to 30, well, we're long the VIX at 16. That's our hedge. Now, that's a credit spread, so I'm taking in some coin to do it. This bear call spread is a credit spread. I'm going to use some of that credit and buy a bear put spread. I'm going to buy the NOV 14 puts and sell the NOV 13s. Double vertical, bearish double vertical. And I did the math earlier. Thank God I did the math on this trade. 50 contracts is a maximum profit of about $5,000. Okay, so if volatility comes in, if the world says, you know what, we're not going to end, everything is going to be all right eventually, that trade's going to make $5,000. I could be completely wrong, folks. This could be the first time in history that vol decides to stay elevated for the next 3 months, and we'd all be racing to Montana with our AR-15s. So that ain't going to happen necessarily, folks, okay? So, real quick, what I want to do, folks, is, and I apologize for the Trade Monster thing. Like I said, I'm going to be talking to John and Pete here in a couple weeks, and I'm going to let them know about that. But here's what I want you to do. You can go to t3live.com/trial. That's brilliant. Exactly. I'm going to let you trade live with us for a couple times for the next couple weeks, at least 2 times a week. You're going to join us for our weekly options live trade brief every Monday morning. I place 1 to 3 weekly options trades. Place them Monday morning, if I see them, or Monday, and then manage them, hopefully, for max profit or min loss by Friday. Then on Tuesday mornings at 0900, we have what's called the primary live trade briefs. Okay? That's 2 hours, an hour and a half, 2 hours long, a lot more strategic, operational, and tactical. Weekly options, very tactical, fast-paced. Tuesday morning is where we take a deep breath and we go, okay, longer-term positions, bullish on Brazil out to 2017, for example, okay? So that's the primary live trade brief. So you can go to t3live.com/trial. So for $38, I'm going to give you a test flight into, what's that, about about 6 hours of live trading. And if you can't make it, don't worry about it, because as I showed you, I stop in the middle of my live trading session. I copy and paste the trade into our broadcaster, and I fire it out to you. I've been sitting in death by meeting when one of my other traders blasts out a trade. There's my text. Oh, sweet. All right, Doug's placing a awesome. And I have my Trade Monster platform on my phone. So if you can't attend the live trading, don't worry about it. I'm also going to give you access. This pays for itself. You ready? To our 3 workbooks. If you want to buy them on our website, each, the total would be $195. For $38, we're going to give you access to that, okay? So, like I said, real-time text and email alerts, 4 hours of live trading in our primary live trade brief. You're going to get access to our ready room, kind of like in a fighter squadron. This is where we hang out. We interact. It's our forum. If you have any questions for me, any of the other traders, that's when you get into it. If you can't attend, we send out the recording. Everything is recorded, and we will send out the replay link along with the trades that we covered, okay? So t3live.com/trial is where you need to go, okay? It's about $2,000 a piece to get into our live trading services, but if you get into this $38 trial, and at the 14-day you want it to continue, don't worry about calling us and anything. It'll rebill. I think it rebills at about $295 a month. or give us a call, and for the price, for the price of all of this stuff, it's close to $7,000. This 2-week trial is worth about $728, and we'll give it to you for $38. The point being, our live trading services are about $3,000 a piece, $2 to $3,000. We'll give you access into both the ones that you have a trial in for $19.95 if you give us a call. Okay, t3live.com/trial. 2 weeks, that's not even the price of a good bottle of wine. If you can't see the trading with me, seeing where volatility is going to go, looking at longer-term trades, we have a lot of Apple trades on right now. It's going to be a good time. It's going to be a fun couple of weeks, especially after the bloodbath today, to get airborne and trade options. Okay, if you're new to options, definitely get on board. I wouldn't be trading weekly options. That's like jumping literally in the middle of a firefight. Get into the primary live trade briefs. Open a paper trading account. I call that the flight simulator, right? You don't read a book on aerodynamics and then run out to the airplane. Try and get airborne and you'll kill yourself. Get in the simulator. Open a paper trading account, okay? So t3live.com/trial.
Hey, Matthew, you there?
Yeah, man, I was just wrapping up. I clicked that by accident, folks.
Oh, okay. Sorry. I just want to make sure we didn't lose you.
Yeah, no, it was it muted itself. I think it gave me a heads up. That was get the hook and pull Whiz off thing. You can give us a call, folks, at 888-998-3548. Rob or Annie, if you have any questions, they can hook you up. But t3live.com/trial. Join us for the next couple weeks. Check out some what I think is going to be happening with volatility, where I think the market's going to be going. Like I said, $38 isn't even the price of a good bottle of wine. Okay, so Reed, I apologize if I went over a little bit, my brother. Thank you for having me. I appreciated seeing all the other presenters, and you guys do a great job here. I actually learned some stuff today as well. So thanks for having me. I appreciate it, man.